As it stands now, looking at energy into 2015, it feels like it's anyone's guess until we get more clarity on the fundamental side, what's happening with the oversupply glut. So the way you're positioning it for your 2015 picks is very situational. So let's take a look at Schlumberger, the one-year chart, and why you're looking at that one now.
So first and foremost, these stocks have just been destroyed in every segment in energy. So not really anything has been spared. And that said, when the number one player in an industry gets hit and down 20 to 25%, I understand that the macro is uncertain, but they're number one for a reason, because they've got the strongest balance sheet, the most diversification geographically. And the concerns that most people have right now are the US shale, the market, and how that might dry up. Well, these guys, relative to the rest of the industry, have only a third of their exposure in North America and only 15% in pressure pumping. If you look at some of the others like Halliburton and Baker Hughes and Weatherford, they're much bigger presence in pressure pumping, so there's more risk to them. I like this company, it's best in breed. I may not catch the bottom, but I do think that they're not only a survivor, a winner. And so that's why I want to be involved in this one on the pullback.
Clearly the refiners have been hit, but there are some situations where balance sheets look great, assets are performing. You sold Marathon in October, but you're warming up to it again.
Yeah, it's down 40% from its high, and this company has done all the right things in terms of shareholder value returns. In terms of selling non-core assets, they spun off their refiner. They're really a pure play in E&P. So if you want to take I don't want to say gamble, because I really don't think that this company is a gamble, but if you're uncertain about the macro, this stock will probably continue to fall. But you have some dividend protection, you've got a management that cares about the shareholder value, and they are exposed in the higher growth area of the Eagle Ford and the Bakken. So they're positioned well for the long term. Plus, they might be taken over, by the way.
Well, that always helps. Finally, let's take a look at Royal Dutch Shell, which you do own now for Action Alerts Plus.
And so this has been a restructuring story, and they almost yield about 5%. The balance sheet is very strong, getting stronger. They've actually have sold off $15 billion in assets this year. They've indicated that over the next 2 years, they're going to return $30 billion in buybacks and dividends, so they're shareholder friendly there. They're really shrinking to grow. They're kind of behind what some of the other majors have done, like a ConocoPhillips, or again, maybe even a Marathon, where they stayed bloated, if you will. So I think there's a lot they can do with their cost structure, and at the same time, this new CEO is getting it done. And again, you get the yield while you wait.
Right. So really, to wrap it up, even though these names have been trading in sympathy and they've certainly pulled back a lot, when you look at these special situations, it can almost be a gift to get in at these levels, because if you take away what's happening in the underlying, these are some really nice performing companies.
Yeah, I've always kind of gravitated towards special situation stories in the commodity industry, because I'm not good enough to tell you when oil is going to bottom or when it's going to top. But I do know these companies are strong enough and doing the right things for the shareholders over the long term that should be rewarded. These stocks are discounting $50 oil. So if you think oil is going lower, well, then maybe you want to wait. But for me, I actually think that it's a good time to be buying.
Okay, thank you.